Welcome everyone to the Buying a Home in the Netherlands webinar. My name is Kimo Paula. I'm from Expat Housing Network, and I'm joined today by a good partner, Cesar from Mr. Mortgage, and my colleague Ludo from EHN. We'll be sharing a lot of information with you tonight. So a few house remarks. This is the Buying Your Own Home webinar in the Netherlands, and today's session will be recorded and shared. We're going to talk about a few things today. First, we're going to talk about us. Maybe we shouldn't start with that, but hey, maybe a nice introduction is good. Then we'll talk a little bit about renting versus buying. So I was going to go over that part. I'll share a little bit more about the actual buying process, and then we'll have plenty of time for FAQs. We'll try to answer some of the question over the chat, but the majority of the question we'll actually answer in the end. But before we start, we have a few questions for you. This is, by the way, the second time that we're doing this poll thing, so bear with us if we mess this up. We have a few questions just to get to know you guys a little bit better. Please take a minute to answer these if you want. It's optional, you don't have to answer them, but this will actually give us a little bit of information on who you are, how you found us, and more importantly, what the demographics are of the people that are attending. Can everyone see the poll? See if I can share them. Yes, I can share the results. So the majority of you guys actually found us through Facebook or another mean or through the website. How old is everyone? The majority is between 26 and 45. That makes sense. And what does the household look like? Couples are in the majority, then singles, and there's a few families actually, which is quite nice. And in what area would you like to buy? So the majority is looking in Amsterdam. Then we have The Hague and Utrecht on third place. And then there's a few other places as well. What made you decide to buy? The rents are too high. I can completely understand that. Cesar will also share a little more about that. And what else? They would like to settle. That is quite nice. Happy to hear that you enjoy living in the Netherlands and that you're keen to settle. I bet the majority of you are internationals. Or you would like to build up equity, which is a awesome bonus of actually buying a house. But again, Cesar will share a little bit more about that. We're going to share some more information with you about these processes. And later on, we'll have another few questions that we'd like to ask you. And at the end of the presentation, before we ask or answer all of your questions, we'll have a few more. Bear with us. Hopefully, this will break it up a little bit. But let's get into the presentation. I mentioned my name was Kimo. Ludo is joining us as well. I have a few colleagues that will help you if you decide to move forward with the Expat Housing Network. Good to know the majority of us are internationals. We know what it's like to live abroad and to find a new home and start a new home. So whether you're from name it what country, moving here, we know what it's like to go through that process. So that we are not typical real estate agents. The majority of us have backgrounds in social studies, psychology, name it, or arts. But what we do value is your experience. I think that's the key, and that's the driver of everything that we do. It's not so much we're not moving bricks or moving houses or in real estate. We're in a people's business where we actually help people find a home and feel at home. That's us. Then maybe Cesar, you would like to share a little bit more about your company?
Sure. Good evening, everybody. My name is Cesar, founder of Mr. Mortgage. We're a mortgage advisory and brokerage firm, so we make sure you get the best deal out there. In the slide, you can see my wonderful team. I'm really proud of my team. From left to right, Robin, Egle, and the Wizard of Oz, Uskan. Together, we make sure that your mortgages get approved. So thank you.
Mm-hmm. Today's goal is to add value to you guys. We believe in sharing information freely. So if you have a question, pop it in the Q&A. Don't pop it in the chat, because otherwise we'll have to look at two different screens. Pop it in the Q&A, and then we'll answer them as soon as possible. The majority of them will be answered, though, at the end of the presentation, so bear with us. We want to make sure that everyone actually gets to see the presentation. Maybe there's people that have a hard stop, and I think the information in the presentation is quite relevant. First, a newsflash. The National Mortgage Guarantee increased from 310,000 euros to 325 in 2021 this year. What does that technically mean? The National Mortgage Guarantee is a guarantee for people that buy a house with a purchase price of not more than, well, this year is 325,000 euros. What does it do? It guarantees that if, for example, something happens to your personal situation and you are not able to pay off your mortgage anymore, and you'd have to foreclose on the house or sell the house, if there would be a debt outstanding to the bank because, let's say, the value of the property decreases and you wouldn't be able to pay off your mortgage, then the national mortgage guarantee covers that part. This, for example, happens if, for example, you get injured, you lose a partner, all things that we don't hope for you to happen. But it is a good thing that it's there, especially after the global financial crisis. We saw that a lot of people were hit hard, so that's when the National Mortgage Guarantee was installed. Good thing about National Mortgage Guarantee is that if you're able to actually get it, it does cost a little bit of money, about 0.7% of the guaranteed amount, but you will actually be able to get better interest rates as well. Cesar will be able to tell you all about that. Apply for it this year. Last year was 310, this year will be 325. Next year will probably increase a little bit as well. Then, Cesar, maybe you'd like to share a little bit more about the transfer tax.
Sure. So first-time home buyers have a bit of a challenge of buying a home. So what the government has decided also to make it more difficult for investors to buy and invest in a home. Government has decided first-time home buyers younger than 35, so between 18 and 34, don't have to pay property transfer tax. Every time you buy a home, you need to pay property transfer tax or a duty stamp. It is 2% in the Netherlands. If you're younger than 35, you don't have to pay it. There are a couple of scenarios. So we saw in the poll, or the results of the poll, that that 1/3 of the people attending tonight is single. If you're single under 35, then you don't have to pay property transfer tax. There is a detail to mention. The purchase of the property cannot be 400K or more. So you need to buy a property that is less than 400K. We also saw in the results of the poll that we have couples and families. If you are in a relationship and you want to buy the property together, then age is still a detail to consider. A scenario: a couple, one is older than 35, the other is younger than 35. In that scenario, the person above 35 is paying 2%, and the person younger than 35 is paying 0%. So in practical sense, you're paying 1% because you're both buying 50% of the property. Then you have a situation both under 35. This is not a situation that would happen this year. Both under 35, somebody already, one of the two already bought an apartment and already used their tax exemption. In that scenario, again, so in this example, what you see on the right side, Kate already bought a property and she already used the tax exemption. Then she still needs to pay 2%, and John is paying 0%. We have a calculator on the website. You are receiving these slides after the webinar, and then you see the button you see on the right bottom of the slide will refer you to a website with the transfer tax checker.
Perfect, thanks. Next slide. Well, we'd love to learn a little bit more about you. This will actually help in the next steps of the presentation as well, the answers to some of these questions. So let me see if I can share the next one. A lot of people are responding. That's great. Thanks a lot, guys. Cool. I think we have plenty of answers now. Thanks a lot for this. We don't have to wait for the full minute. Let me end the poll and share it with you, because the questions were, where in the process are you? I'm researching. The majority of you are actually researching. There's a few who've actually viewed some properties. That's great. No one's actually made an offer or accepted the offer yet. So that's where we can maybe add some value moving forward as well. And did you chat with an agent yet? Yes, no, some of you have, some of you have not. I'm always keen, of course, to find out if the information that we share is new to you. So for those who've actually chatted with an agent, is this new, or has he or she mentioned most of what we're actually sharing with you? And did you chat with a mortgage broker? The same thing applies. 10 of you have, 58 of you haven't. I think the majority of you haven't chatted to Cesar and his team. So that's a good thing. And please feel free to reach out if you have any questions. And of course, this is a moment to ask questions. Put them in the Q&A, and then we'll get back to you after the presentation. Cool. Okay. Renting versus buying. Cesar.
Yeah. So initially, you have two options: renting or buying. If you want a roof over your head, so those are the only two options you have. And then you should consider what you should do. I'm not saying that everybody should buy, although I'm saying you should buy. But why you should rent, I'll give you a couple of benefits. So if you rent your home, then at least you'll have the flexibility to move out. Obviously, you have to deal with the contract, but after that you're done. You can move out. You don't have to deal with any risks because you're not selling a place, for example. You don't have to pay taxes, and there's no down payment required. Obviously, there is a bit of a deposit going on, but with most landlords, you'll get that back. Then you have the downside of owning a home. You have to pay taxes, a property tax, sewage tax. You have to pay a homeowner's tax. So there are a couple of taxes to consider, and you have to deal with maintenance. And as I mentioned before, it's harder to move because if the market collapses, then it can be difficult to move out, because it could be difficult to find a buyer and to sell your place. So if you're still interested in buying a home, I think you are, because I think that's the main reason to attend this webinar tonight. Why you should buy: owning a home, it provides you stability. Payments will not go up every year based on inflation or indexation. Your monthly payments will build equity, and there are also tax benefits in the form of mortgage interest deductions. So the interest that you pay on your mortgage is tax deductible. Downsides of renting a home: rents can increase. There are no tax benefits, and you're not creating any wealth. In other words, you're burning money that you will not see back. Just a quick comparison. We compare two properties on the Gerard Douwstraat in Amsterdam. On the left side, you see renting, 27,000 euros per year for an 80 square meter apartment. On the right side, you see a similar property, a bit bigger, 88 square meters. The asking price was 525K. If you look at the initial investment, because that is something to consider with all with the closing fees, an estimate for this property would be 23K. That is including the property transfer tax. What you do then, because you need to compare renting versus buying, because those are the two options that you have. So looking at a mortgage, we could, by the way, provide a lower interest rate. That's good to know. But monthly payments would be a bit over 1,800. That 1,800 includes the repayment of your debt. So it means it's divided in two parts. The interest payment is a bit under 700 euros per month. Comparing that 691 euros to the 2,250, both are money that you're burning away. But there is a huge difference, and therefore you'll earn back the closing fees, in this example, in 15 months. To be a bit more conservative, if you want to stay in the Netherlands for at least 2.5 years, then it makes sense to buy. So we already mentioned building up equity. There was also one of the answers in the poll. Just a quick example. So we use the same mortgage amount, 525,000. After 5 years, when you sell your property, the bank just wants to get paid back the debt that you still owe them. So that would be 453K. So after selling your property, you would have 71K as a gain. So another reason to buy a home.
Thanks, Cesar. So Cesar just mentioned something about the closing fees or the purchase costs or the closing costs. We'll share a little bit more about that. Because when you buy a property, it's not just the purchase price that you have to pay. Of course, there are some other costs as well that are involved with the actual purchase of the property. Cesar mentioned something about transfer tax, that if you're 34 years or younger, or 34 or younger, that you're exempt from transfer tax if you buy up to 400,000 euros. So you don't have to pay that transfer tax. But if you're 35 or older, or if you're buying a property worth more than 400,000 euros, then this is the biggest payment that you'll make when it comes to the purchase cost. What we've done here, you see 3 columns, and in the last column, we've actually highlighted if you can deduct some of this money from your taxable income at the end of the year, which is good because then you get some money back at the end of the year. The notary has technically 2 setups, so they do the mortgage deed and they do the transfer deed. For both, you'll pay, but only the mortgage costs are tax deductible. Why? The government wants to motivate you to actually get support, get advice, and get specialists to help you with securing your mortgage, because it's a difficult product. So what they want to do is they want to give you some motivation to go for those parties and get some of it back at the end of the year when you deduct from your taxable income. The transfer deed, however, is not deductible, but take into account you'll pay between 600 and 1,100 euros there. Please note that these prices vary per region. So in the capital, you pay a little bit more. In the south and in some of the more rural areas, you'll pay a little bit less. So that's why we added like a big range here. When it comes to securing or helping secure a mortgage, a lot of people think that the bank is doing it for free because you're getting a mortgage there. That's not the case. They also charge you some, and then the mortgage broker also charge you some money. And this is, again, tax deductible, so you'll get about 40% of it back. Then your typical real estate agent, they charge a percentage of the purchase price. We don't do that. We charge a fixed fee. We don't believe in percentages. Why would you pay more for a service that we offer you when you're already paying more for a property? It's not the right incentive. We charge a fixed fee. Then you pay the appraiser, which costs anywhere between 550 and 600 euros. Please be mindful, though, this number will increase this year because they're going to make it a little more difficult for appraisers to assess the value, or they have to do more work to actually get to the same results. So we'll see those numbers increase. And also, if, for example, you want to add renovations or other things to it, then you'll see that number increase as well. Technical inspector, it's a building inspector, somebody to come and inspect the property. We'll talk a little bit more about that later. They'll charge you, it's not tax deductible. The interpreter is mandatory. This is good to know. The last step, you'll have someone to help you interpret or help you understand what you're signing for. Then you'll have the bank guarantee. This varies per provider. And then you have the national mortgage guarantee, what we just talked about, the guarantee that allows you to, well, if something were to happen, they'll cover the difference. And there's a cost involved with that, and that is tax deductible. Perfect. We'll talk a little bit more about the process. Who will you meet? Well, you'll meet the notary. There's a difference in services versus, well, between the capital and the rest of the country. In Amsterdam, the notaries actually help you with the purchase contract as well. Outside, these selling agents will do that. What we are seeing, though, is that the majority and more people are referring to notaries when the purchase contract is drafted up. But this is the guy or the girl that you'll meet who will draft up all the legal documents. So they're very important. They're also or I said independent. Even though you pay them, they're independent because they've vowed to be that. And they'll help you draft up the mortgage deed and the deed of transfer. These are the documents that, well, allow you to become the actual owner, but also allow you to become the owner of a mortgage. And it's quite important to have these in place. So this is what the notary does. Then you'll have the appraiser as well. Meet Michelle. Michelle will come into the picture when you have an offer secured or an offer accepted, not before that. Some people ask us, well, can we get the appraisal to come in before we submit the offer? I don't think that's very smart, because if your offer is rejected, you'll pay for the appraiser. And she'll come in afterwards. What she'll do is she'll determine the value on the property based on properties sold in the neighborhood that are similar. She'll also look at things like the VVE, the quality of the property, and so on. And what she has to do is she has to draft the report. But since you're paying her, what is keeping her to kind of like dance to your tune, right? To say, okay, hey, well, you've offered this. Let's get somewhere close. She has to file the report to an independent institute called the NWWI. They actually see and check if she's played by the rules, if her foundation of the result is correct. Once they give the approval, only then will the bank accept this. Why is the appraiser important? Because the bank's only going to give you so much money. Cesar will share a little bit more information about that later. This process might take anywhere between 3 to 7 business days. Please be mindful that if it's busy, then it might take a little bit longer. Then you'll have the building inspector, Millie. She is not legally required, it's not mandatory. We would always advise to get somebody in to actually inspect the property who has an eye for contracting, for construction, and so on. Why? Because you don't want to buy a property that ends up to be a fixer-upper, even though it looks perfectly new, right? When does Millie come into play? She comes into play also after your offer is accepted. We'll share a little bit more about the process, and most of the time she'll share the report within 1 or 2 business days. Then meet Robin. Robin is your mortgage advisor. He will share all the information necessary to actually obtain a mortgage. And there's actually 2 or 3 things that are super important. One is that the story that Robin tells to the mortgage provider is as important as the details that you share with him, because it'll help you secure that mortgage. Also, they know more about what products the different mortgage providers have to offer. I always like to compare a bank and a mortgage broker in the following way. A bank is a retail shop. You go in there, you buy what they have on offer there, which is relatively limited because they don't send you to another store to say, okay, this is, I don't think that suit fits you, you should go there. I don't think that dress fits you, you should maybe go there. The mortgage broker, however, has access to all these short stores. So they're more kind of like your personal shopper / stylist, and make sure that you're happy with what you buy and you understand what you buy. They have a range of about 30, 40 mortgages that you can pick from different providers. So they'll be able to actually help you out and make the right decision. Whereas a bank will try to sell you their mortgage. Then you have the buying consultant, my lovely colleague, Alana. She was on a roll last week, which is really nice because it was quite competitive because of the transfer tax, but it looks like things are clearing up a little bit again. What she'll do is she'll actually help you in the process from the start to finish. What that means is she'll support you during the process with helping book properties. She'll go to properties with you, or if you want a remote service, we can do that as well. She'll review the legal documents, and I think that the price research that she does is essential as well, because a lot of people are purchasing properties based on, well, some kind of emotion. They look at the property price on Funda, and then they go there and they're thinking like, oh, this is beautiful, it's worth much more, or they think it's shitty, it's worth much less. But what we look at the market value. So what is the market value of the property? And that's what Alana does. She also reviews the legal documents for the transfer deed, the purchase contract, and all the other documents related to a purchase. So yeah, invaluable. Of course, it's not rocket science. If you speak Dutch, if you've done a few times before, you can definitely do it yourself, but it's always nice to get somebody on to support you in the process. Last little bit, the timeline. It's a little bit skewed this beginning. I'm not sure if you can see the cursor. So from start to offer submittance can depend on what's on the market. And well, if your offer gets approved, you might have to go back and forth a few times before you get an offer approved. If you do, congratulations, but please be mindful that you don't have a deal yet until your signature is on that purchase contract. So what you do is you do your due diligence. You may remember I mentioned the appraiser and the technical inspection, and they actually come into play after your offer is accepted. And then you'll get them in to come and inspect the property, get the valuation of the property, and then you'll sign the purchase contract. Once you've signed and the seller signed, you are, well, in the deal. You still have a few days to pull out though, whereas the seller does not have that. And we call that the cool-off period. The moment where you sign the purchase contract is the moment where the final application kicks in for the mortgage. And then you have about 4 weeks to get your mortgage approved. Depends on what timeline you've agreed to also with the seller. When you get the mortgage application approved, congratulations, great job, Cesar and team. I'm splitting the beans a little bit, but they're most of the time able to manage it sooner than 4 weeks. No pressure, Cesar, sorry. Once your mortgage application is approved, then everything is sent to the notary. And then about a week before you become the owner, the notary will send kind of like a final bill because the purchase costs need to be completed and any other costs outstanding. And then during the day of inspection and transfer, you'll go to the property first. You'll see if everything is still in orders, nothing is broken, nothing is damaged. And then you'll sign the transfer deed, which makes you the proud owner of the property. And then you get the keys. You also become a proud owner of the mortgage. And then you have about 2 months to mention anything to the seller when, for example, they should have told you something was not working, but they forgot to or didn't on purpose. That's the liability term. Don't wait until the last moment, the last week or the last day to share it. Please do it as soon as possible, because the longer you wait, the more difficult it becomes to prove that something was not working when you got the keys. The seller has an obligation to share everything he knows about the property, and sometimes they forget or on purpose do not share. Doesn't happen often, so luckily. Then we'll have a list of frequently asked questions, things that will actually help with gaining understanding of the market and the process. This is where my colleague Ludo kicks in. He's already been active, I've seen on the chat, but Ludo will ask the questions.
Well, thank you very much for that introduction. All right, the first one is for you, Cesar. The question is of course mortgage related. Can I get a mortgage with a temporary contract or as a freelancer?
Yeah, the short answer is yes, you can. It has a bit of implications, but that's easy to manage for us. If you're a freelancer, so if you have a temporary contract, let me start with that part, then you need to ask your employer for a letter of intent. This is a standardized format. Your employer just needs to fill out a couple of checks, and that's it. If you have that intention, that if your employer gives you the intention to prolong or change your contract to a indefinite contract, then there's no issue. Even if your employer doesn't want to fill out that or doesn't want to give you that intention, even then we can help you. Then we need to look at your income of the last 3 years. If you're a freelancer, works the same way. Banks are going to look at your track record. You need to have at least a track record of 12 months, so a year. Best case scenario is to have a track record of 3 years, so you can really show what you're worth, and we'll look at the average income in those 3 years.
Okay, cool. All right, then on to you, Kimo. What happens if you want to leave the country after several years?
So there's a few things that you can do. I think this is one of the most popular questions we get. Why? Because the majority of you are from a different country. You're here for work or for love or for name it. And what happens when you decide to move back or get a new job or name it? There's a few things you can do. Let me click on next. The first is you can keep your home, but you'll have mortgage costs, right? That is fair. You can still own the home while living in another country, but please bear in mind that you will have double costs because you'll probably rent or buy a place there. You can also rent out your home, keep your home, rent it out, but you need permission from your bank. Most banks, they will not allow you to rent out a home without them asking them first. And even if you ask them, they might have some questions. Cesar might be able to share a little bit more about that. And we could actually give probably a different webinar about that topic, but that's another story. Then the third thing is you can actually sell your home. And please note that there's nothing there's no such thing as capital gains tax here, or there's no mortgage penalty. If you sell your home, you can pay off your mortgage without a penalty, and you don't have to pay capital gains tax over it. That, of course, applies if you've made a little profit, which is quite nice if you do. So these are things you can do to when you decide to leave the country.
Okay, cool. All right, back to you, Cesar. How much can I actually borrow from the bank?
Yeah, so when we calculate how much you can borrow, we look at how much you can spend every month. And then we recalculate it back to a mortgage sum. What you can use as a rule of thumb, and also to be on the conservative side, is take a look at your annual income, multiplied by 4, and this is really conservative, and that's how much you can borrow. You can also contact us. we can provide a free calculation, and you'll know the exact numbers.
Okay. All right. Then another one for you, Kimo. Where should I actually buy a home?
Good question. It's very easy for me to say because we did the poll. You should buy a home in Amsterdam, The Hague, and Utrecht. But that's probably not the question that you guys want me to answer. The question or the answer is depending on several things. Because the foremost, more important thing is that you think about the quality of living, right? So you'll buy a home to live in yourself. If you buy a home purely as an investment, you might end up living in it for a longer period of time, then it might not make you happy. I know people that decided to be here they planned to be here for 1 or 2 years, maybe 3 years, and then it turned out they stayed for 10, 12, 14, 16. It's super important that you first think about that quality of life, quality of living. What does that depend on? What type of property are you looking for? What is the household of your family? But also, where will you be in 2 or 3 years, right? Like, are you planning, for example, on getting kids or expanding or getting a dog, name it? Then these might all play into your decision. That's the first and foremost important thing. Because you also have to look at things like amenities and so on, because that also brings me to the next part. You want to buy, of course, a property that is at least solid when it comes to the value and doesn't necessarily decrease in a short period of time. Of course, I can't time the market. I don't have a glass ball, but you want to buy something that at least increases a little bit or stays relatively solid. What are some of the factors there? There's a few things. First of all, it's accessibility and the amenities as well. So when you look at a neighborhood, is there enough to do? Are there enough shops and stores and stuff around? Because that attract people, those things attract people, and they make the quality of life better there as well. But also accessibility, right? What's the public transport like? Also have a look at, are there any plans to develop public transport? When we saw, for example, in Amsterdam, the North-South line being introduced, we saw that more people were looking in the north of the city. The same thing applies for every other city, right? Like, how easy is it to access it? It could be by car, for example. If it's a ring road, is it close to a ring road? That could be interesting, especially for people that will have to work in the different cities or parts of the Netherlands, and it might make the room to sell your property also a little bit easier. But the same thing applies for other public transports, train, tram, buses, so on. Have a look at that as well. And then, of course, other projects or developments going on. Sometimes a project, so let me give an example. I think that when, for example, they're working on a project that consists of a lot of retail, that helps with the value of a neighborhood, because again, retail is meant for people. And when you actually look at areas that are retail heavy, then you'll see that they'll attract more people than areas that are retail, less retail. The other thing as well is that, especially if you're early in the market and you have a plan to stay here for 5 to 10 years, look at where the creatives go. They have a good nose for places that are still relatively cheap, and value for money is important as well. So have a look at where they go. But when it comes to value for money, don't look at the super popular areas, because there's a very strong chance that the prices don't really go and increase as much in the near future as some of the other areas that are still under development. So have a look at that as well. You don't want to pay top buck for something and then end up maybe buying on the top of the market and having to wait much longer before it goes back up again. In the long run, I've never heard anyone say, oh, I wish I didn't buy 5 or 10 years ago. And maybe, of course, when the first global financial crisis hit, they would say, oh, shit, I would have waited a little bit. But in the long run, we're already past that. So again, maybe this refers back to what Cesar mentioned as well. You build up equity, and there's definitely chances of increasing the value of your property. I hope that answers the question a little bit.
You forgot to mention one detail, Kimo, and that's where the best football club is. That's where you should live.
That changes every year, though. So
no.
Oh, it does not.
No.
All right. I have another question for you, Cesar.
Yep.
It's regarding renting. Can I rent out my house or room?
Yeah. So Kimo already mentioned it earlier. So one example is we got a lot of questions from clients about renting their homes when they leave the country. Long story short, you need to have the approval of your bank. Usually when you buy your home, the product that the financial product that you get is a residential mortgage. And what you'll notice is that in the mortgage deed, in the terms and conditions of that product, it is not allowed to rent out your home. There is a nuance or a bit of a gray area about renting out a room, because you can get a roommate. Your roommate needs to sign some additional paperwork, but you are allowed to have a roommate. Renting out your home is also possible, but then you need to get another product, which is a buy-to-let mortgage, and that could have some implications. And there is one small detail to consider as well. You can rent out your home if your current employer is sending you abroad for a project. Let's say you work for a big corporate, and that big corporate is their office is in Amsterdam, for example, and they are sending you to their, let's say, Sydney office for a year for a special project. Then you will get approval for that 1 year to rent out your home.
Okay.
I hope that gives enough insight.
Definitely. All right, and then back to you, Kimo. What's the typical amount that I should overbid, if I should overbid at all, of course?
It's a good question. We get this question a lot. Why? Because people want to know, of course, what's their golden ticket, what's the winning bid, and if there's indications that help them submit the winning bid, then they're happy to hear that. But there's no set percentage. Why? Because every property is priced differently by the selling party. That's the first. And what you see on Funda is the asking price. And the asking price gives you an indication of how opportunistic a seller is. If a selling agent, for example, because he's working for the seller, is too forthcoming and says, okay, hey, you know what, let's give it a try. People are going crazy at the moment. On average, people are overbidding by 10%. So why not just put it up for the actual market value and see what people do? That happens a few times. It doesn't happen a lot, but it happens a few times. And then suddenly it turns out that they don't get the offers they expected. Most of the time, people and sellers will actually put up properties for a little bit below the market value. How much? That really depends on, again, how opportunistic the seller is. So have a look at the market value of a property. This will tell you about what a property is actually worth at the moment on the market, and it'll also give you information on what the bank will actually give you in terms of a mortgage. Based on that, you can say, okay, I want to submit this kind of offer for this purchase price, or you say, I really love this place. You know what? I don't want to miss out on it. Let's add some cash on top of it. That happens a lot as well, but don't base it on the asking price, base it on the market value. So sadly, no set percentage. Maybe in the future when we'll have big data, we'll be able to look at it from kind of like a street point of view. But even then, right, like look at properties differently, because you have a fixer-upper versus a new building or new build or a renovated property in the same street, and it will not give you the same information because yeah, they're completely different. So it's difficult to compare. So base it on the market value, not on the asking price or what you hear on the streets.
All right, clear. Then for you, Cesar, what happens if I leave my job after I secured a mortgage?
Short answer, nothing. As long as you keep on paying your mortgage, nothing happens. Personal story, I used to work for ABN AMRO, and in 2016 I left the bank and I started Mr. Mortgage. Since I was able to keep paying my mortgage, nothing happened. So yeah.
Cool.
We're very happy that you left the bank, Cesar.
Thank you. Thank you.
Definitely. All right. Then I have another one for you, Cesar. What is the 10% deposit I need to complete?
Yeah, the easiest way to explain this, could you show the timeline, Kimo or Ludo? So the 10% deposit. So you can see so you sign the purchase agreement, and then what happens between the mortgage application and you and the seller signing the purchase agreement is that the seller has zero security. Because the seller doesn't know if you have a job, if you have income, if you have savings. They don't know anything. Obviously, they trust you since you're working with Expat Housing Network and you're already more or less vetted. So the seller trusts it, but they don't know. The security as a buyer is that are those 4 weeks. And that 10% deposit is usually asked for 1 week after the deadline of the mortgage approval. And that is giving the seller the security they need, so you will not cancel the agreement anymore. So that's the 10% deposit. If you don't, if you're not able to transfer 10% as a deposit, and that deposit is transferred to the notary, then you're able to get a bank guarantee. And the bank guarantee is a simple letter from the bank stating that if you back out of the deal after date X, that the bank is paying the seller that 10% as a penalty. Obviously, the implication is that you have a debt of 10%, but that's the that's the explanation of the 10%, and I hope that was clear enough. So it's the security for the seller.
Perfect.
All right. Then, of course, I have a question for the both of you. It's a very relative or a very hot topic at the moment. What impact does COVID-19 have on the housing market? Maybe you would like to start, Kimo?
Yes, I can start. I'll do it relating the housing market itself. Maybe Cesar can share a little bit more about the actual mortgage expectations.
Mm-hmm.
So first of all, full disclosure, I don't have a glass ball. I don't know to tell the future. If I would be a very lucky man, and I would of course share it with everyone. But there's a couple of things that play into the developments of the housing market. First, let's look at it from a national point of view, because the Dutch housing market is relatively solid, especially compared to the global financial crisis in 2008. The housing market currently looks like it can take a little bit of a hit, which means that if, for example, the market decreases a little bit, then people are not going to go in panic and will not see a big curve downwards. Why is that? Because the majority of the people have only taken out a mortgage of up to 100% of the value of the property. And in the meantime, in the last, 12 years, have gained some value on their property. So that helps, because back in 2008, the properties at some point went underwater. It's very typical for like that to be in the Netherlands, because the majority of them are underwater. But what does that mean is that the value actually drops below what you've got outstanding as a mortgage. Now that's not the case, so that is good to know. It's relatively solid. Also, what I know is that the housing stock is not growing fast enough. So there's currently a shortage of about 300,000 houses in the Netherlands. And if I know one thing, is that the government has never, since I've been involved in this business, but probably since I've turned 18, they haven't met their requirements or the standards of building enough properties. So that makes it tricky, because it means that there's more demand than there's supply, which has a good effect, of course, on the value of a property if you own something. But if you buy something, then it becomes a little bit tricky. The mortgage rates also, of course, have an impact on it. But what can we expect from COVID? Because the world is turned upside down and was turned upside down last year. Now it's hopefully slowly tilting back again. But what does it mean? Well, from an economical perspective, we will see some backlash of this whole thing. Whether that is due to inflation or anything else, it's very difficult to say. I'm not an economist, so I wouldn't be able to say it, but we're currently printing a lot of money. We're trying to save a lot of companies, but at some point, that tap or that big spending will have to be turned down a little bit. What are we going to see then? What, of course, will the length be of us battling the whole COVID thing? That's very difficult to say. It surprised us a few times, and I think that the politicians are very opportunistic or optimistic always because they know they have a few years only to govern. So they'll try and, of course, well, keep everyone happy by also painting a bit of a better picture. Now they're a little bit more careful when it comes to that, but who knows what's going to happen there? That's very difficult to say. When you've asked me about a year ago, I would have said, oh, we'll see it in the next 6 months. We'll see a little bit of a dip, and then we'll see it kick back again. If you look at historical numbers, then there was a little bit of a dip after a pandemic, but afterwards it got to all-time high again. What we're also seeing is that there's a difference between how people look at properties, rural versus urban. We're seeing a big, well, I wouldn't call it necessarily a very big exodus, but we're seeing an exodus from the city to places where you have more space, because why would you stay in a 50 square meter apartment that is 400,000 euros if you can spend that time in a 90 square meter apartment that is a little bit further from your work, but since you'll be actually working from home, that's quite nice to have that extra room. So we're seeing a move there. So currently the increase, or last year, the increase of property values was more in the rural areas versus the cities. We still saw an increase of about 5 to 6%. But we'll just have to wait what that's going to do in the next 6 to 12 months as well. Because if I know one thing, then it is that cities are still very attractive because there's a lot of amenities, a lot of facilities, there's a lot happening, and energy pulls. It's almost like a black hole, right? It pulls you in, especially young people, and that has a positive influence on the city, therefore the housing market, therefore companies, and so on. So it's a ball rolling. If we look at the developments over the last 10 years, if I look at the capital, but also if I look at Rotterdam, if I look at Eindhoven, if I look at Utrecht, we're seeing the number of people and internationals just like yourself moving to these cities increase. We saw, of course, a dip because last year, and this year we'll not see the numbers go back to what they were. But I think once this thing is behind us, we'll see the numbers go back again. So we might see a little bit of a dip, maybe a couple of percentage, but in the long run, 5 to 6 years, I think we'll be back on track to hit all-time highs again. I'm not saying that because I want you to buy a house. I'm saying that because I do believe that. I think that, which maybe also is a statement. Don't buy a house for the short term for 2 or 3 years. Buy it for a little bit of a longer term. Next time you can answer that question, Ludo. Cesar, would you like to share something as well?
Yeah, sure. I'll start with the practical impact of COVID on the mortgage landscape. So what we saw happening during the first lockdown, rates went up because banks didn't know what the impact would be. They also didn't know what it would do to housing prices. Everybody was assuming the worst. So mortgage rates went up 0.2, 0.3. So that had quite an impact. Also, what happened, we mortgage brokers, we need to fill out a lot of extra forms just to convince the bank that you will not lose your job or you will not lose your income, and explain why. So that's the that's what happened in a practical sense during the first lockdown. We're almost 1 year later. We still have those forms, so it's a lot of extra work from our side. What we also saw happening, because the housing market, as Kimo mentioned, it took a hit, but nothing happened. Prices still went up, so banks felt comfortable, and currently the current interest rates are 10% lower than what they were before the first lockdown. So interest rates have dropped again. Obviously, and this is the less practical approach, or the practical impact. The European Central Bank has a lot of stimulus in place. I don't see that changing anytime soon, because people, so citizens, companies, governments, banks are addicted to low interest rates, so I don't see that changing anytime soon. And if it changes, it will change with baby steps, just so everybody can get used to higher interest rates. So that's the impact of COVID on the mortgage landscape.
And thanks for that. And homes have become more important than ever, right? This is like we're stuck in our homes, so
yeah,
now everybody's spending time in it. So I think that, and correct me if I'm wrong, but we saw, or you guys have seen, Cesar, the amount of mortgage requests increase by quite a lot in the last 6 to 12 months.
Yeah, it's strange to, and I feel a bit weird to say it, but we had our best year in 2020. So everybody started to think about where they live, how they want to live. As you mentioned, there is a bit of an exodus going on. It's not 10,000s of people, but people are moving from big cities to smaller cities. So yeah, it has an impact on how we live.
Yeah. And I sometimes get the question, but if all these big companies say that you can work from wherever, what is keeping you from working in, I don't know, Bali and just staying there? That's a fair question, of course, right? Like I must mention though that as a company, like having people in 100 different places can pose quite a challenge from a tax perspective and from HR perspective. Plus, what is keeping people that are currently living in London to move to Amsterdam, because they don't have to spend an hour on the tube to get to work, right? Or they don't have to pay ridiculous amounts of money for a property. The same thing goes for San Francisco. That also makes cities, because there's still a lot of people that want to move to cities and to countries that are quite international, which the Netherlands is. The majority of us speak English pretty well, and we've got a backline that is quite easy to reach. So what's keeping people from, instead of moving to Bali, which is lovely, but honestly, I don't know if you've worked on the beach before, but having the sun shine on your screen and all the sand on your computer it looks lovely, but it's not always ideal. I think that we'll see also those like global movements have a good impact on some of the underrated areas, cities, and so on. We can go on for ages about this, I think.
I agree. And you didn't even mention bitterballen. That's another reason to stay in the Netherlands.
Our USP. Love it. We should actually do a webinar on this. Cool. Then we've reached the Q&A. So Ludo, maybe you can start with the Q&A.
Most definitely. My computer's being charged, so we can we can keep going. Let's see. The first question is for you, Cesar. The question is the 13th month salary included or not in the mortgage amount?
Yeah. So yes, it is. That's the short answer. We look at your annual income. It can consist of the 13th month. You obviously have a holiday allowance, commission, bonuses. It can be included. Not everything can be included in the same way, but it can be included. Yeah.
Okay. All right. And then regarding the mortgage, we were talking about closing costs for a bit. Is it possible to use the mortgage to cover the closing costs?
So I didn't mention it earlier, but the amount you can borrow is based on the property's value. And the amount you can borrow is 100% of the property's value. Example, if you buy your property 500K and the property's value is 510K, then you can borrow 510K. This does not happen often. So then in such a scenario, you could borrow that extra money, but 9 out of 10 times you're not able to borrow that extra money. So it needs to come from savings.
Okay. All right. And then for you, Kimo, we were talking about the transfer tax exemption. Massimo asks, first-time home buyers, is that just related to the Netherlands? He has a house in Italy and would like to buy a house in the Netherlands. Does that make him a first-time buyer or not?
Yep, it does. So if you've bought a house before in another country, you're considered a first-time buyer. And maybe to specify, I think Cesar mentioned that first-time buyer using the actual exemption applies, right? So I believe even if you've bought a house before in the Netherlands, but you've not used the exemption before, then you're still considered first-time exemption user. Let's maybe rephrase it to that.
Yeah, correct.
All right. And then another one for you, Cesar. Is it possible to get a mortgage, more precisely to be a co-signer in a loan contract, if I have an income from another EU country?
Yeah, that is possible. It depends. Yeah, this is a really specific case, but it depends on your connection to the Netherlands. If you have a BSN, a social security number. But this is something that is better to be discussed in a one-on-one conversation. Yeah.
Okay. The next question might also be a question like that. I am going to question you it. Can you buy as a single person if you are married and your partner does not have income? So to use the exemption.
So Dutch law says that if you buy a home to live in and you are married, by default you're buying it together, unless you have a prenuptial agreement. So I hope that is answering that question.
I hope so too. I think so. A question for you, Kimo. A question from Renee. Renee is over 50 years old. Does it even make sense to buy at all?
Of course. 50 over 50. Okay, maybe let's be more specific. I think that the majority of people taking out a mortgage is for 30 years. So if you're 60, 70, or sometimes even 80 years old, you might still make the full amount, right? And I think that renting a property, I wouldn't necessarily call it money down the drain, but it is money down the drain because you're not building up anything. And especially with the rental prices currently, you're spending too much on it, right? So that same amount can be spent on a mortgage and then you'll actually save half of it. So I think it definitely makes sense. It's also a nice project, right? It's nice to actually have something that you can spend and put a lot of love and care into and make your own. Whereas with a rental property, the majority of people are like, you know what, I don't really own it. Like I'll maintain it as good as possible, but whenever something happens, I have to go to the landlord to fix it. So why would I invest in it, right? I think that quality of life, quality of living is super important, especially nowadays where we're spending most of the time at home. Who knows what's going to happen in the next couple of years? Invest in that. It's going to make your life so much easier and much more pleasant. I've experienced it myself. I was out quite a lot, but the last year I've overspent on my home, making sure that it's very pleasant. And I must say, my partner loves it, and that's why it's also quite nice. But I do enjoy it myself as well. So no, definitely, I would definitely consider it. Unless, of course, you want to travel the world and such like that. But that's a different conversation, right?
Okay, for you, Cesar. Question from Fernando. You have annuities versus linear mortgages. Which one is cheaper in total costs?
The linear. So the annuity versus linear, the biggest difference is how much you repay from the start. And with the linear mortgage, you are repaying more from the start. However, your choice should not be determined by which one is cheaper. It should be determined by so there is this life cycle we are all in. I'll give you a short example. Close to home, my wife is pregnant. We're expecting our first child in a bit over a month. Costs are going to go up exponentially. I got an offer from a daycare. It feels like a second mortgage. What I'm trying to say is, so obviously with the linear, you're repaying more, but it also means that your monthly payments are higher. Susan, thank you for congratulating me. We just got a chat. But that could also be a reason to choose the annuity over the linear. And another detail, so you can, if you want to repay your mortgage faster, with every bank you can repay 10% of the original principal per year. Quick example, if you have a mortgage of 500K, then it means that every year you can repay 50K annually. So if you want to do any extra repayments, then you're free to do so without additional charges. So that could also be a strategy.
Okay. All right. Let's see. I have one for you, Kimo. What can you tell us about the yearly property taxes in the Netherlands, the usage taxes?
Yeah, good one. So there's a couple of taxes that you have to take into account when you live and own a property. Let's start with the living part. That's municipality taxes. That's taxes that you pay for using the systems of living in a certain municipality. Think about sewage tax, waste tax, water tax, water board charges, stuff like that. Mm-hmm. And then you'll also have property tax, which you'll pay on an annual basis as well. And that is actually linked to the WOZ value, which is the value that's given by the municipality to your property based on some big data. They're always behind on the data, so most of the time it's lower than what you actually paid for the property, which is good. Don't contest it. If it becomes too high, you can always contest that amount, but that's what you pay on an annual basis. Then there's one thing called homeowners tax, but what might be good is that, and I think Cesar can share a little bit more about this, this is a tax that you won't technically see in a bill. Why? Because it's deducted, and correct me if I'm wrong, Cesar, it's deducted off technically the interest deduction profit that you're making. So your interest, you can deduct that from your income tax, and then the difference there is actually minused by the homeowners tax that you have to pay. So you don't see it as a bill in your mailbox, but you do have to pay it, but it's kind of like hidden. My question to you, Cesar, is what happens if, because you can actually also agree to deduct the interest deduction from your monthly payments. What happens then to the homeowners tax? Does it also get deducted from it? What happens then?
Yeah, so the bank will deduct the mortgage amount from your bank account. So you are going to pay what we call a gross amount. If you fill out your preliminary tax return, it means that you'll get the monthly payment or the monthly benefit from the tax authorities. If at the end of the year it shows that there is a difference, so in other words, you got a bit too much or a bit too less, then it will be either paid by you to the tax authorities or the other way around.
Yeah. So the majority of people I know pick the way that they get a little bit of a more amount in once a year, so they don't actually experience the homeowners tax. Yeah. If you do, then you might indeed end up paying it at the end of the year.
I should give you a certificate for explaining this so well.
Oh, thank you.
I'm going to think about it. Yeah.
Okay, all right. I have another question for you, Cesar. It's about the NHG. If you're buying a property that is over the NHG amount, so over the 325, can you get a protection for part of the price of the property?
No. So the limit of 325 is based on the value of the property. So if you buy something of 350, you cannot get a mortgage with that is covered by NHG.
Okay. And what happens, for example, if I were to lose my job and can't pay my mortgage and I don't have an NHG?
So the position of the bank is not to, no, let me rephrase that. The bank is, I don't know who plays Monopoly, but the bank is always the winner. However, the bank is not looking for ways to, I don't know how to use the, phrase without cussing. They're not out there to, sorry for this, screw you over. Thanks.
Exploit.
Thank you, Kimo. Oh, somebody's already putting it in the chat as well. Thank you, Carlos. So they're not out there to exploit you. In such a scenario, the bank will they will assess the situation, because it could be also more beneficial to them to give you a bit of a discount on the payments, if they have the feeling that you could pay them back later. So it really depends on the situation, but they will assess and see what the best solution is for all parties.
Okay. All right. So does that mean that regarding the NHG in total, would you advise it, the NHG insurance?
Yeah, if it makes sense, then definitely. What's also good to know, when we advise you on the mortgage, we're not only out there to get you the best deal, but for example, we will also discuss and show you what happens if you get unemployed. What does it mean financially? How can you mitigate that risk? So that's definitely a topic that we'll discuss. NHG is not the only option to protect yourself.
Okay. All right. Back to you, Kimo. Regarding the offers, can you actually retract an offer after it's been accepted? For example, if you find that the building needs refurbishing or whatever.
Let me go to this one. So let's say you submit the offer, it gets accepted. Hooray, 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 well done. But you're not committed. You're only committed once you sign the purchase contract. Please be mindful that the selling party is also not committed until the purchase contract is signed. So don't wait or tiptoe around too long. Use the time effectively to do the due diligence. But if it, for example, turns out that the building inspector comes back with a ton of work, then either you could renegotiate, try that, but please be mindful if you do that too hard, then the seller might say, you know what, I'll go for the next best. Or you can pull out. So technically, until you've signed that purchase contract, you are not obliged to move forward. And even after the signing the purchase contract, you have those 3 days, which cannot end on a weekend or a public holiday, to actually cool off or come to your senses, or wake up sweating at night and be like, what did I do? Or fall extra in love with the property. So you have some time to kind of like consider, but please use it wisely and don't use it lightly either, because let's say you pull out of the deal too easy. Let's say you've submitted multiple offers on properties and you pull out of 4 deals, and then the seller pulls out on your deal after it was accepted, and then you have to go back at some point because the selling agents are offering properties that you like, then that might jeopardize your relationship with them. So that's why we always are a little bit hesitant. We always ask you, are you sure you want to move forward with this property? You want to submit it? Will you be happy if the offer is accepted? And of course, there's always cases where you find out more about a property after the offer is accepted and you want to pull out. We'll not hold it against you. But please be mindful, but yes, you can. Okay.
And does that also work with the appraisal?
Yep. If the appraisal report turns out to be much lower, so you're not going to get the bank or the mortgage that you hope you would get, you can pull out. But please be mindful that you do that within that period. So before the purchase contract is signed or before the cool-off period ends. If you do it afterwards, then you need to have a finance clause in place that states that if you are not able to get a mortgage of this amount, you can pull out. And an appraisal report is pretty solid proof. You would still have to get rejections from banks, of course, but it'll be very easy because the bank will just say, sorry, but it's not worth that, so we're not going to give you that. Yeah.
Okay. All right. And then for you, Cesar, what happens if the mortgage application is not approved? Is the purchase contract then cancelled?
It depends. So you're going to negotiate, but I think Kimo can explain this better. You're going to negotiate about a lot of things, not only the purchase price, but also a couple of clauses. And one of the clauses, some people call it a mortgage clause or a financial clause. So you have the decision, because we don't have a system of getting a pre-approval for a mortgage. So what you do in the purchase agreement is that you decide if the purchase is subject to getting a mortgage approved. if the mortgage is not approved, and you can discuss details with Kimo, then you can. So if the mortgage is not approved, then you can cancel the agreement with the right paperwork from the bank that we will help you get, obviously.
Okay.
Well put. Well put.
Thank you.
All right, then I'm straight back to you, to Kimo. Kimo, what can you tell us about buying a property under construction or under development?
Yeah, it's a good one. It's quite interesting, actually. So buying a property that hasn't been finished yet, you can do it, and there's definitely some pros and also some cons. Let's start off with the pros. Like a new build is most of the time higher quality than anything that's been built around. So that's a good thing. Also, a good thing is you might still be able to influence the final construction to some extent. So what will be the finishing touches of the interior, right? So you might be able to actually influence that. One more upside is that, well, it's new, it's high-end, energy labels are relatively high, which means that it's quite sustainable. And what I'm seeing is a push from the government that buildings are more sustainable. So I think that also with this whole COVID thing, right? Like airplanes are not in the sky as much as they used to be. We're seeing the fossil fuel companies having a hard time. We're seeing Tesla go through the roof. I still don't understand why. I do believe in it, but it's not worth that much. But I think that we'll see a trend that will last a little bit longer. Sustainability will be a thing moving forward. So that's a good thing. What are the cons though of buying a new build? Well, you haven't seen it, so you don't know what it's going to be like finally, right? I know somebody who bought a house and there was a pillar in the middle of the house. It wasn't the drawings and everything. It wasn't the pictures. But once he actually moved, he was like, it does make the floor plan a little bit less functional than I thought. Of course, that is a very, very kind of like extreme example, but that can happen, right? The other downside is that you'll pay double the cost because you'll have to pay a mortgage for the ground that you've bought or the several phases that you've bought or that you're paying the mortgage for. Now, let me rephrase that. So when you buy a new build, then you pay in installments. First, you pay for the ground, then you pay for the foundation, and then every layer on top of that until it's finished. What that means is that you'll actually have to get out a mortgage for all these phases, or at least you have to pay for these phases. So you'll have a mortgage while you're not living in it yet. So you'll have to rent or own your previous home or another home. So you'll have double the cost there. One thing that I know is that construction always takes longer than you expect, and there's always little things that the builder interpreted differently, and little things could also be big things. I know we purchased a property a while ago, and when the final inspection came to be, we heard that one of the major walls wasn't insulated. I'm like, how can you forget about that? Like that's, but hey, those things happen. So stay on top of it. Make sure that either something happens with the price, you get reimbursed for it, or they still do it. Finally, they still did it. It was fine, and so on. But that can happen. Anything I'm missing? No, I think that's the majority of it. Have a look at ground lease. If you actually own the ground or if you're paying ground lease, that's not very specific necessarily for new builds, but that could have an impact on what you could borrow. And I think from a market value, it's always a bit tricky to compare a new build because, hey, it's newer than anything that's been built before. So what do you compare it with? Most of the time, the price that is on offer or a little bit lower is actually something that you'll get from the bank. But I hope that answers the question a little bit.
Cool. I think it does. You were just talking about ground lease, Kimo. What can you tell me about ground lease? So
sometimes the municipality owns the ground that the house is on. Sometimes a private owner owns it, but steer clear from that because that can be the wild, wild west. Doesn't happen a lot anymore though. But when the municipality owns the ground, technically what it means is that you're renting the ground from them. You'll pay an annual amount to the municipality. They can index it, increase it by inflation on a yearly basis. But it's also good to know is that most of the time they've agreed on a specific amount for a specific period. So let's say it's for a period of 50 years and it runs until 2055. Then up until that year, you'll pay, well, the amount increased by inflation. Sometimes it's paid off. You don't pay anything for that period, and only afterwards you'll start paying. Sometimes it's been set, which means that you'll pay a specific amount for indefinite. And sometimes the period after 2055 has been paid off. That doesn't happen a lot though. But you'll pay the ground. You don't own it. The municipality can't necessarily take it away either. So that is good to know. But maybe that's a financial question. It's also good to know that the ground lease is deductible. To what extent, Cesar?
It depends a bit on your income tax bracket. But the mortgage interest deduction is available for 30 years. Ground lease, the tax deduction of ground lease is eternal. What is good to consider if you buy a home where you need to pay the annual ground lease or biannual ground lease, that will have an impact on how much you can borrow. When we calculate how much you can borrow, we actually look at how much you can spend on housing. And housing in this case means the mortgage and the ground lease. Quick example, let's say you can spend 1,500 on housing and you need to pay recalculated 100 euros per month on ground lease. Then it means that only 1,400 is left for the mortgage. So that's good to consider. It does not have to mean a bad thing, by the way. Yeah.
Okay. All right. So then we have a next question is from Cindy. Cindy asks, what does bank approval depend on if I want to rent out my home? Do I have any influence over the bank's decision?
So one scenario where you can rent out your home is the example that I gave earlier about you working for a big corporate that has an office in a different country, and your employer is sending you to participate in a special project abroad. So that is one scenario. Another scenario would be to get a buy-to-let mortgage. Then you're actually obliged to rent out your home. Those are actually the two scenarios where we'll give you the approval.
Okay. All right. Then a question from Emil, maybe also for you, Cesar. What happens if an offer is higher than the actual bank's valuation?
Okay. So why I was distracted, the bank is not
Appraising the property.
Yeah, thanks. So there is so you have the selling agent who is selling the home. You have the buying agent, which is Expat Housing Network, and then you have another third agent that will do the valuation. That valuation gets submitted to NWWI to get it validated, and that is sent to the bank. So the bank doesn't have any impact on what is in the report. But if there is a difference, so you can borrow up to 100% of the property's value. Example, if you buy if the purchase price is 500K, the property's value is 510, then you can borrow 510. If the property's value comes back as 490, then you can borrow 490, and then you need another 10K in savings.
Okay. And then for you, Kimo, a question from Sandra. How can I know what the actual market value of a property is?
Good question. So you compare properties sold in the last 6 to 12 months. Have a look at a few things though. First of all, don't compare a 60 square meter property with a 90 square meter property. Don't compare a new build to a fixer-upper, and don't compare a property that has a garden with a property that doesn't have a garden, because people perceive all these things differently. They have an impact on the value. So look at properties sold in the last 6 to 12 months, and then based on that, you can define what the market value is. Of course, if it's been sold 12 months ago or longer, then you have to add a correction. So you'd have to say, okay, hey, about 12 months ago, the market was 6% lower than it is right now. So you have to look at it a little bit like that. There's a big calculation behind it. There's several resources that you can tap into when it comes to getting the valuation or getting property prices. But I'm happy to share that on one-on-one.
Okay. All right. Then we have a question from Vincent. It's for you, Cesar. What is the actual current interest rate?
Yes, we work with 28 lenders, and you can choose an interest rate that changes every month, so a variable rate, and you can fix it up to 30 years, and anything in between. I'll just give you the most chosen interest rate, which is the 10 years fixed rate, the lowest you can get, and it also depends on if your property has, for example, an energy label A, or if it's a newly built. If it's a newly built, the rate could be around 1.35 for 10 years, and without energy label A, you'll have an interest rate around 1.45 to 1.5.
Okay.
And that's for 10 years as well.
All right, cool. Let's see. I have a question from Vincent. Cesar, does it make a difference in the amount of mortgage I can get on a permanent contract or on a temporary contract?
In essence, no, unless your employer is not intending on giving you an indefinite contract, so they don't want to prolong your current contract, then it has an impact. And there are several ways to approach this, but it could have a big impact, especially if you don't have a long track record in the Netherlands.
Okay. All right. Let's see. I think this is a good one for both of you. I'll start with Kimo. Is there a big difference in the process when I buy a property in cash? And what about the taxes?
So when you buy a property in cash, it makes it easier and faster because you don't have to wait till your mortgage gets approved. So you can technically say, hey, I'll submit an offer and I'll pay everything in cash. So I can actually, a week after the, it takes a little more time for the notaries to draft everything, but you could technically move in relatively quicker and sooner. Please be mindful that there will be questions asked where you got the money from. There's a Dutch law in place that states that anything above 10K has to be notified to the authorities. So you'll have to prepare to prove where you get the money from. Are there any other tax-related matters? Yes, there are. We have something called wealth tax, but Cesar's the financial guy here. He can share a little bit more about that. I'm happy to share it, but I don't have that much wealth yet.
One day.
Well, it actually doesn't. It doesn't matter that much. There are small differences. That's not. But what? So to give you an example, I just mentioned the interest rates. 1.35, 1.45. So if you pay down your home cash, then you're saving 1.35 per year. Obviously, savings accounts will not provide you that same interest rate. But if you invest your money elsewhere, then for the long term, and you don't have to take a lot of risk, you will get a better return and a bigger benefit than 1.45 per year, especially for the long term. So from a financial perspective, it doesn't make a lot of sense to pay a property in cash.
Okay. All right.
Yeah, and don't forget, like due to inflation, your mortgage will technically decrease in value, right?
Yeah.
So there's several factors to take into account when you invest your money.
Okay.
So I didn't mention it, but they're also financial advice in that sense. So, and so I think that I think it's good. It's good to mention it because a mortgage is one product, right? But looking at your whole of wealth and investment is a good thing as well. Maybe not now, or maybe for the future. I think it's good to pay attention to that. So I think it's worth mentioning. That they'll actually be able to help you with a little bit more than just, okay, here's your mortgage and good luck with it, right?
We jokingly call the mortgage the gateway drug to the financial world.
I can imagine. All right, cool. I have another one for you, Cesar. It's from Cindy. If my financial situation changes, can I increase my mortgage payments to pay off the mortgage faster, or decrease the payments and then pay it back slower?
In both cases, yes, you can. Increasing the payments, not an issue. Banks won't mind unless it stays under 10% of the original principal. Slowing down the payments, also not an issue. However, you'll lose the tax benefit, so the mortgage interest deduction. So it will have tax implications, but it is possible if, for example, you decide to change roles or do something else in your life and accept that you'll earn less. It could be a way of reducing monthly costs. Yeah.
Okay. All right. Then I have another one for you, Cesar. It's from Robert. How difficult is it to get a mortgage as a company owner? Robert owns 100% of the company and is employed by his own company.
It is slightly more difficult, but it's not impossible. So bank is going to look at, in this specific case, simply to your salary, obviously, and they'll also look at profits. So it has a bit of it's a double-edged approach. Yeah, for more info, just contact us and we can explain you all about it.
Cool.
www.cesar.nl.
Exactly. All right. Then I have one for you, Kimo. It's from Natalia. Natalia asks, I'm turning 35 in December of 2021. What stage of the process do I need to be at by then? I assumed for the transfer taxes.
Yeah, for transfer tax. So transfer tax is linked to the date of transfer. That's why they call it transfer tax. So you have to make sure that you become the owner before you turn 35. So that means that signing the transfer deed and getting the keys to the property are the things that you want to have done before you become 35, or you turn 35.
Okay. All right. Then for you, Cesar, is the 2% Christmas bonus actually included once you apply for a mortgage?
Yes, it does.
Cool.
Everything Christmas related is included. That's
nice. All right, cool. For you, Kimo, when you buy a new build, can you sell it before it's actually built? So in that sense, buying a project. Yeah.
So you buy a new build and you can sell. Yeah, technically, yes, you're allowed to do that. Sometimes there are non-speculation clauses when you purchase a property. So please be mindful that you read it carefully because they don't want investors to buy these new homes. We're seeing that more and more often. But if it's not in there, then technically you can sell. Like we recently purchased a new build from previous owners, which were not the project developers. So yes, it's possible.
Okay. All right. And you were just talking about ground lease. Madhu asks, if we buy a already built property, we do own the ground as well, right?
So sometimes you can buy a property that's been around for a while, but still is on the ground owned by the municipality. So it's not a given that if you buy an old property that there's no ground lease. So have a look at that. It should be mentioned in the FUNDA listing and on the listing details. Yeah, no, there's no guarantee that there's no ground lease if you buy an old build. We see it in some of the well, we see it in Amsterdam quite a lot. We see it in some of the other areas as well, some of the major cities, but less and less so. One of the things that I'm experiencing is that even though it earns the municipalities quite a lot of money, it also causes them a hassle because it's a lot of admin work that they need to be doing. Yeah, I'm not sure what it will do in the future, but maybe we'll see offers where you can actually buy it off for indefinite more often, which means that, well, you don't own the ground, but if you pay a certain amount, which can be relatively high, you don't have to pay ground lease ever again. It differs a little bit per municipality. But please read the listings carefully.
Yeah. Okay. All right. And then Cesar, a question for you. Does investing part from cash have major effect on the mortgage rates?
Yeah, obviously. So let's say you pay down 10% on the property and you only get a mortgage of 90%. Then banks will give you a discount on their interest rates. So it could have a positive impact. Yeah.
Okay. All right. Let's see. A question for, I think, for Kimo. I have a Master Shat Chow says, I have a Dutch nationality, but I'm not a citizen in the Netherlands. Do I need to pay taxes after I bought a house?
Sorry, could you repeat the name and the question again? I got distracted by the name a little bit.
Yeah, so it's Master Shat Chow Center for the Netherlands. I have a Dutch nationality, but I am not a citizen in the Netherlands. Do I need to pay taxes after I bought a house?
So taxes technically are linked to you, to your BSN in the Netherlands. I'm not sure when it comes to homeowner taxes. I think you would still, no, I think it actually applies to the country that you're a resident in. That's where you actually have to pay the taxes. This is a good question. I haven't helped anyone buy a home before that left the country and had to pay taxes in either both countries. Maybe Serge, you could share a little bit more about that.
Sure. So one important detail. So property taxes apply because you own the property. You need to pay it. It's as simple as that. Another thing that you need to consider is the property transfer tax will not be 0%, will not be 2%. It will be 8%. That's another pity. And besides that, yeah, the homeowners tax applies. So yeah, homeowners tax, property tax, municipality taxes, and the 8% transfer tax.
Okay. Municipality tax if you don't live in it.
Yeah, if you rent out the property, exactly. Yeah.
Yeah.
Okay. But it needs to be paid. That's
yeah.
Then I have another one for you, Cesar. It's from Andrea. Andrea lives in Belgium, just over the border, but she works in the Netherlands. Is it possible for her to get a Dutch mortgage and use it for her Belgium house?
For a Belgium, no. The property needs, she can get a Dutch mortgage, but the property needs to be in the Netherlands.
Okay, even though it's really close to the border, it does not make sense. Okay.
And I speak Dutch.
Yeah.
Yeah, exactly. Just checking.
Yeah.
All right.
The small background, Dutch law applies, and obviously in Belgium, Dutch law does not really apply. So.
Yeah. Okay. Let's see. A question for you, Kimo. It's a question from Susan. Can you explain a bit more based on, for example, a property that is that costed 525,000? How much tax you can expect to pay each year?
Okay, so the good question, Susan. The municipality taxes are most of the time set fees, and they're not necessarily linked to the value of your property. They're most of the time linked to whether you're living there by yourself or with more than one person. The WOZ value is linked to the property tax. and the property tax amount is 0.0346%, I believe. So it will be a few hundred euros on a yearly basis when it comes to the property tax. We did see an increase in municipality taxes and so on compared to last year. So what I would say, take into account, of course, it differs a little bit on what municipality you're living in. In Amsterdam, a little bit higher, for example, than in Utrecht, but also take into account that you'll spend about 400 to 500 euros there. Again, it depends on if you have a one person or multiple person household. For the property tax, it's a couple of €100 as well. Between, well, again, well, in this case, you mentioned the property price, right? So multiply it by that. Was it 525,000 euros?
Yeah.
I'm not gonna do a quick calculation.
On the top of it, come on,
Putting me on the spot there. So I would say about, well, between 200 and 300 euros there. And then the homeowner's tax. How much is that, Cesar? That percentage?
0.6 of the VAS value.
But technically, you won't see that as a bill because it's deducted. So
yeah.
So do the math there, and you'll end up with a nice round calculation. Let me know what it is.
Is this, by the way, any different if you have the 30% ruling?
No, that does not have an impact on the mortgage interest deduction. It does not have any impact on property taxes. So,
okay.
Yeah.
All right. Then I have another question from Cindy. It's for you, Cesar. How will a higher interest rate from the European Central Bank impact the mortgage contract I signed?
In essence, it will, if you already signed a contract, a mortgage contract, then it will not have an impact on the rate that you're paying as long as you fixed the interest rate. So that will have no impact. The impact, you could have an impact if you didn't buy a home yet and you don't have a mortgage yet, then obviously rates can go up, and then the impact would be that you can borrow less and you need to pay more on interest.
Okay. All right. Then I have a question from Rotary Williams, if I'm saying that correctly. He or she asks, has Brexit had any effect on buying a house in the Netherlands if you are from the UK? Maybe a question for both of you.
You want to go first, Cesar?
Yeah, mine is simple. What banks do, they look at EU citizens versus non-EU citizens. Obviously, there is a warm relationship with the UK. So the only thing that has really changed is that with some banks, you need to, for example, pay down 5 to 10%. Obviously, not with all of them, but some banks have extra requirements for non-EU citizens, but that has changed. But besides that, no, we still have quite a lot of banks where you can borrow up to 100%, and there are no additional requirements.
Okay.
We did, of course, see a bit of an influx of people moving here. Not necessarily this year, but in the previous years, we saw several companies relocate, whether it was the EMA or related companies. We're seeing that the financial companies are moving more and more to Amsterdam and to the Netherlands. So we do see an impact there on the people looking for a home. But I think COVID kind of like countered that a little bit and stopped the stream of people moving to the Netherlands compared to the years before that. But so far, like no direct impact. Cesar was talking about the warm relationship. Maybe it cooled off a little bit. Well, especially according to, we have this really crazy blue monster that is the mascot of our Brexit campaign. If you'd have to believe him, it cooled off a little bit, but we're still welcoming everyone that moves to the Netherlands. So
cool. All right. Then I have another question from Sandra. She asks, can you talk a bit about schenkingsvrijstelling? How does that affect getting a mortgage?
Okay. This is about getting a donation from, for example, parents or family to buy a home. Quick summary, I think 9 out of 10 people listening to these to this webinar don't have to deal with that. What does that mean? If you get a donation from your parents who never lived in the Netherlands before, then there is no limit and you don't have to deal with the schenkingsvrijstelling. Wow.
Did she use the Dutch word?
Yeah,
She did actually.
Ah, well done.
yeah.
Yeah, cool. All right, let's see. A question from Madhu. This one is for you, Kimo. After buying the house, am I allowed to change or enhance or rebuild certain parts or even completely of the property?
Let's start from top to or from bottom to top. Let's start with little things, right? Definitely. Please be mindful though that if you buy a protected monument, it might have an impact on what you can actually do. Also be mindful of structural walls. Don't just tear them down because they might endanger. And honestly, from experience, like I used to live in a rental house, and we lived on the top floor, and the previous tenant, she took out all the walls. It was a 2-story place, top floor. Like whenever you walk there, it kind of like felt a little bit like a trampoline.
Wow.
So please be careful when it comes to that. But technically, you could change things like the bathroom, the kitchen, stuff like that. If it's protected, you'd have to look into the municipality files to see what you can actually change and what not. Most of the places that you'll buy won't have that. Other things like tearing down the whole house and rebuilding it completely, that's a little bit more complicated because the municipality will most likely have certain restrictions to what you can do and what you cannot do. And especially if it's a house that's part of a row, you can't just tear down and put a castle there. So start with small parts, little bits on the inside of the house, that's fine. Whenever it's constructional, be careful. If you're buying an apartment, especially then be aware that if it's constructional or structural, the wall, that it might have an impact on your upstairs and downstairs neighbors. If it's an extension, you might have to get a permit as well, which means that you have to go through the municipality. The municipality also allows neighbors to kind of file a complaint if they think that that's ruining their view. So there are some steps to take if you want to extend or build, what's it called, a dormer or something like that on top of your roof to extend kind of like the attic a little bit. So there are definitely ways to do it, but please be mindful of the legal things there. Inside the house, the majority you can change.
Yeah. Okay. All right. Then for you, Cesar, question from Raja. I already have a mortgage for my home, but I want to move to a bigger house for more office space. What are the possibilities that I can take another mortgage for under construction property and sell my current house after I get the new home?
What are the possibilities? There are possibilities. This is a common scenario. Kimo earlier gave a example about you renting your current home until the new property is finished. Only thing you need to consider is, so when you buy a property that still needs to be built, after purchasing the ground, you are already paying 2 mortgages. So you need to have sufficient savings for at least 12 to 24 months or 1 or 2 years, because that's what you need to consider usually when buying a property that still needs to be built. But it is possible. It's like moving to a regular new home. Yeah.
Okay.
Sufficient. There are enough possibilities.
All right. Then I have a question from an anonymous attendee. He or she asks, my mortgage is not enough to pay for the house. And if I were to ask my family in my home country to send me money, let's say 20K, do I need to pay tax over this money?
Again, the schenkingsvrijstelling. If your family didn't live in the Netherlands before, they don't have to pay any taxes on the money that is donated to you. What is good to know, I know in some countries, you as a receiver don't have to pay taxes in the Netherlands, but the person giving you the donation could pay taxes. So it's good to consider contacting a tax advisor in your home country or the country where the family is living.
Okay. All right. Let's see. I have a question from Vincent, also for you, Cesar. You have a online mortgage calculator online. How accurate is this? Do people usually end up getting a mortgage higher or lower than the online calculator?
It's indeed one of those two options. What's good to know, the calculators are a bit of a teaser. So you put in your income, but depending on the bank that you choose, it could be that a component of your income is not used for the mortgage at that specific bank, and then you could borrow less. So it all depends on the total picture.
Exactly. Okay.
But it is giving you a good idea. Let's keep it at that.
Yeah. All right. For you, Kimo, also from an anonymous attendee, when a seller sells the house, do they have the preference to sell it to a local Dutch person or to a foreigner?
I think the preference goes to the best offer.
Yeah.
Sometimes you see that they prefer, so let's say there's two separate, like similar offers, and one is offered by an investor and the other one is offered by a private individual or a family or a couple. And sometimes they'll pick the private individual because they're emotionally attached to the house and they like it to become or owned by somebody that appreciates it as much as they do. But when it comes to locals versus internationals, no, they don't usually take that into account. The best offer wins.
All right, cool. Okay, then for you, Cesar, question from Dom. Dom asks, I get paid in the UK, but my partner gets paid in the Netherlands. Can we get a mortgage together in the Netherlands, taking in account both salaries?
It's a specific question, but based on this information, I'm saying yes, but it depends on a couple of details. So I need to ask a couple of questions to Dom to see what the actual situation is. So yeah, they can Dom, you're free to schedule a free call with us so we can discuss.
Okay. And I have another question from Vincent, a follow-up from a question that we had earlier. Do I only know the amount of the mortgage that I can get after I actually sign the purchase contract? Because that might be too late, of course.
I agree. Yeah, so what we offer is a free overview, no strings attached, free of charge. You'll see, so when you schedule a call with us, we'll have a bit of an introduction for 15 minutes. We assess what your wishes are, we assess what your situation is. Based on that, we invite you to our client portal, so you can upload a couple of documents. So we can already start calculating for you. Once you've done that, you'll receive a link from us to schedule another call, so we can go through the calculation. You can go through the possibilities, and you'll know exactly what you can do and how you can do it. And after that call, I am convinced that you're fully prepared to take the next step, preferably with Expat Housing Network.
All right, cool. Then for you, Kimo, you were talking about ground lease earlier. Can you give us an example of an amount regarding ground lease?
Yes, that's a good question because it varies a lot, right? What I mentioned was that the ground lease often is agreed for a specific period of time. And most of the time that's 50 years, sometimes that's a little bit longer, sometimes a little bit shorter. But let's say it's for 50 years, right? And the last time they indexed the value of the ground was 30 years ago. Then you'll have a different amount that you'll pay on an annual basis than if they would look at the value of the ground now or 5 or 10 years ago. So please take into account that there could be major differences. We've seen ground lease payments of 70 euros a month or year, sorry, and I've seen ground lease payments of 4,000 euros a year. So please be mindful, the more new build it is, the more likely it is that it's the higher ground lease. If it's an older building and you'll be able to see the ground lease terms and the amounts in the listing, then you can take into account from 100 to a couple $100 on an annual basis. But the range is quite big. I haven't seen it surpass 5,000 euros, but I'll bet there will be places. It also depends a little bit on how big the house is and everything. But there'll probably be plenty of places that charge more than that. But it can range quite a lot.
All right. Okay, then I think we have reached our final questions. If there, of course, are any other questions, please pop them in the Q&A now. My favorite question, what are your costs? Maybe you would like to start, Cesar?
Sure. We work with a fixed and flat fee, 3,250 euros. Our fee is tax deductible. Included is the approval of your mortgage, the advisory of your mortgage. You'll get a full financial plan, including scenarios such as unemployment, disability, passing away, and what's good to know, so we also provide these solutions and there are no extra fees charged for those solutions.
Okay.
Perfect. We have two different packages. One is a smart package, which is kind of like a remote agent will help you out, but remotely will support you with doing property research, price research, drafting the offer, negotiation, setting up third-party appointments. So the appraiser, the technical inspector, the notary will review all the legal documents, will prep you for the purchase contract signing and the transfer, will chase the bank, and we don't have to chase Mr. Mortgage, they're doing a great job. But if you work with somebody else, we'll chase them, definitely. And then we'll be your point of contact if anything were to happen after you've moved in. For that smart package, we charge 2,000 euros, including VAT. And then we have a complete package, which is everything in smart, plus we actually book the viewings, we attend the viewings, we attend the technical inspector, we attend the notary. Technically, it's attendance. We'll be there in person, real life, and we'll support you throughout the process there. We do charge a little bit more for that because we spend more time on it. We charge 4,800 euros for that. That's including VAT. Unfortunately, we're not tax deductible. Who knows? We might be in the future, but for now we are not. But we're worth it.
Most definitely. Cool. All right. I think that's that. Those were all the questions.
Well done. Thanks a lot, Ludo.
Of course.
For managing the Q&A brilliantly and for already answering some of the questions. Thanks, everyone. Thanks, Cesar, for shining the light on everything mortgage related, tax related, and helping out with questions I send your way. I think there's one more question in the Q&A.
It's a thank you. So
it's a thank you. Awesome.
Perfect.
Thanks, guys, for hanging in there. There's still 40 people there. It was a pleasure. You know where to find us. Please feel free to reach out if you have any further questions. If you want to have some one-on-ones, we'll be there. We're happy to share information. If you would like to use our service, we'll be there as well. We're happy to help you out. We can help out in the major cities in the Netherlands, so don't hesitate to reach out. Have a lovely evening. I always like to say, I'm your host, Kivo. Have a lovely evening. Take care. Thanks, guys. Speak soon.
Thank you.
Thank you, everybody. Thanks.
Take care. Bye-bye.